Welcome to Crypto Flywheel, podcast where we spin up strategies to turn your digital efforts into unstoppable momentum. Now, let's get that flywheel turning. How's the Clarity Act looking?
The Clarity Act, I think they're going to pass that really quick here based off of the geopolitical narratives going on.
Yeah, I think the Agriculture Committee passed it on their end with only Republicans voting, 0 Democratic votes. So it's not bipartisan, but it passed. So now we're waiting on the Banking Committee's bill, right? So I don't know when that is.
Well, that depends on, I don't know. You know how things happen in Congress, right? And especially when the lobbies are there from the bankers. So we'll see.
Yeah. So from the Crypto Authority, is a supply shock on QNT possible? What's your answer, Professor?
I think that any digital asset within the this financial asset space, the new asset class where they're moving into, any one of those can be a supply shock because all of them have a fixed supply. So yeah. So yeah, I'm sure that QNT is.
The answer is correct. You got the correct answer. A supply shock on QNT is not only possible, it is structurally plausible. So let me break it down for you here. Here's a breakdown. I know we spoke about QNT plenty of times, and you guys are probably tired of hearing it, but I'm gonna try to put this into your heads as often as I can. So here's a breakdown. Fixed and thin supply of QNT has a hard cap of 14.6 million tokens. There's no inflation, no emission schedule, no future unlocks. So compared to most of the large crypto assets, that is unusually tight supply base. I mean, it's very rare. That's what I'm trying to say. So it has low liquid float. So meaning portions of QNT is not actively traded. There's nothing but long-term holders. Enterprise-related wallets are filling up, and passive custody reduces circulating liquidity. So when I say passive custody, I mean there's staking, node staking. Remember, bring your own nodes, BNOD. That's going to be available soon. Once you see that, the price is going to appreciate because a lot more are going to be locked up. So this means price discovery happens on relatively a small float. So a supply shock does not require millions of retail buyers. It can be triggered by a small number of large persistent buyers. So it doesn't have to be, I mean, there's not much to buy, right? So it's going to be picked up real quick. So if institutions or ecosystem participants need QNT for access, licensing, or network interaction, what do you think is going to happen? It's going to remove tokens from the open market. And when that happens, there's going to be a limited supply available. So demand increases with the limited supply and you get price appreciation. So speculative demand comes and goes, right? So utility demand is sticky. So once tokens are required for infrastructure usage, they tend to be held and not flipped. So we're going to have a lot of people holding on to their things. So that tightens the float even more over time. So markets with limited supply do not trend smoothly when demand rises. They gap. The order book empties quickly and price jumps to where sellers are willing to part with holdings. The key risk to acknowledge here is a supply shock depends on real demand materializing. Without sustained usage or institutional adoption, supply alone does nothing. So the structure allows for a shock, but the catalyst must come from necessity. Just like we see in silver.
You literally read my mind.
I know.
When you just I'm talking about when you talked about, right, like with silver, like at the end of the day, we all have studied at some point or another about macroeconomics, right? So the macros tell us everything we need to know, right? So let's just, I just wanted to give you our listeners a quick comparison or an analogy. Back in 2007 to 2009, there was a housing collapse, right?
Yeah.
So during that time, what happened? Commodities went up, like specifically gold pumped from I think it was like $670 to almost a little over $1,000, close to $1,100. And then it kind of went sideways until the next event that happened, right? What was that? In 2019 to 2021, COVID, gold pumped again from 1,200 to 2,030, right? Almost 2,100. So now you have 2025 to 2026, nothing yet, right? There was no liquidity. There wasn't really any big news, right? What's the biggest thing that we had was Venezuela, the silver squeeze and all of that. But now all of that happened. The silver squeeze happened. Gold pumped from 2,100 to right now, what is it? About $5,500. That doesn't happen.
I think it went up to 5,800 and it just corrected a little bit to 55.
Okay, yeah, I didn't even check to honestly. I just know that it's above 5,500. But you're looking at so what does this really mean? There was no event from 2025 to 2026 so far. Nothing has really happened where it was a big deal like the housing collapse or the COVID-19 in 2019 to 2021, right? So what happened? Gold doesn't move like this. This usually means that the trust is breaking, right? Within the fiat currency system. So that's essentially why gold is at all-time highs and silver is at all-time highs. More importantly, copper is at an all-time high and you can't get any and they can't mine. They need many years of copper to mine for what their usage is right now. So there's a lot going on. That's something big is really happening. And similarly, all of these assets are correlated. Comparison, gold, silver, hard assets, new financial system equals XRP, QNT, XLM, all of these tokens are the commodities of the digital side, and then the hard assets and gold and silver and copper. So there's something happening here, and where our listeners should really pay attention to that, right?
Yeah, you got to keep in mind when gold and commodities and stocks, everything pumps. The reason why, another reason why it pumps is because of the valuation of the dollar has decreased. So if the dollar stayed strong, it wouldn't happen. People wouldn't move their capital into hard assets or commodities or risky assets, right? So when the dollar is weakened and when they lose faith in the dollar, that's when we see price appreciation for assets and commodities. Okay, so having said that, did you know, Professor, you're holding a winning ticket?
For?
Well, you're holding the winning ticket. Many of us are holding that winning ticket. We have it locked and it's in a safe, right? So every country is stockpiling gold and silver. It's surging to its all-time highs, right? So everyone is for themselves at this time, right? So, and I can't blame them because you got to do what you got to do, right? So the system is now broken and people are seeing that, and it's breaking right this second. Central banks are repatriating their gold. They're accumulating as much as they can. I want those who have not woken up to see what really is happening. So wake up, see what's happening. Maybe you can position yourself for your future and your family's future. I don't want to sound like a broken record, but pay attention. Everyone is embracing for de-globalization. That's what's happening now. Globalization has failed. The agenda of former World Economic Forum Klaus Schwab has failed. They rolled out the jab. Remember the jab? The wars now or before, the carbon agendas, only to collapse society. The trust is gone. And when the system breaks, there won't be another elected king dollar. So no country will ever be trusted to handle that responsibility. They'll be ushering the neutral, trustless bridge run on blockchain, agreed upon by everyone. And this bridge is XRP. that moves value at little to no cost without any bias. So know what you hold. If you know, you know.
I agree. Digital X. And on that note, did you hear about what happened with SEC? They slowly rolled out the SEC statement on tokenized taxonomy for tokenized securities. Did you hear about that yesterday?
Yeah, I think it was announced today or yesterday, right? Yeah, I read
it today. Today's the 28th.
29th.
Okay, so it was yesterday that it was announced, and it kind of laid out exactly what is happening, right? So they are fully putting this under, like everything that's going to be tokenized, everything, like you're talking about, derivatives coming on chain, but they're going to be like a tokenized asset. Yes, you're going to have the luxury of having a digital asset, but all of these newly rolled out tokens of derivatives and securities, they're all going to be on chain and tracked very well, very closely. So all these logics are, the logic is here control at the end of the day, but we can stand to, if you're an early entrant, you can get some real good alpha yield on this, right? So just be aware of that, so yeah. Do you have anything further to add on the tokenization of these securities, Digital X?
Yeah, I think the tokenization of the statement or the legislation or whatever they have brought out, I believe summarizes that, like, if you're issuing currency, crypto or a digital asset, it's going to first be evaluated by the SEC to determine if it's a security or a commodity. So it has to pass their test first. Then after that is when, like, let's say if it's not a security, then the CFTC will oversee it. So I think what's really happening is there's no more
Wild West of crypto.
Yeah, no more Wild West gonna come through after this gets passed, and the times of making like easy money or fake money or whatever money out of thin air for retailers is pretty much almost over. So
yeah, I mean the days of putting in $100 to get $1 million crypto millionaires that were created back in 2017 to 2022 ish, right? That 5-year window where crypto millionaires were created, those days are gone. Effectively, what they did was that was a trial run from after the housing crisis. Bitcoin was rolled out, and that was kind of like the beta, if you will, right? The beta test coin, BTC. So that's what I think it was. So whoever was awake during that time and understood how to get this new cryptocurrencies at the time made millions, right? Off of very little investment, right? So now that is gone. That test phase is done. Now it's rolling out. A new financial system is here, right? And now on top of that, these tokenized securities, so that's a huge deal. I feel like they're going into two main categories of tokenized securities here, right? Who creates the token and what rights are given to the holder. These are the two main functions of what's happening in the tokenized assets, tokenized securities side. So they want to know there's an issuer tokenized security, and then there's third-party tokenized securities. So each of them which have different, rules and regulations. So make no mistake, this is the new financial system. So everything that's happening around us right now geopolitically was just a smokescreen to ensure that they're rolling this out. It's about to be turned on. Like you said, all of these have high fixed supplies, and there's plausibility for a shortage of all of these assets in the open market for us to take advantage of. So the time is now. It hasn't flipped on yet. So once it flips on, we're all going to be priced out effectively.
Yeah, it won't be as easy to make gains like before. It's going to be a little bit more difficult. But from what I see, I think they're trying to make it more of an institutional type of game rather than like, retail or public like we had the opportunity to do in the past years. So moving forward, I think their game plan is they want to have full control over this sector, right? Just like they do with the stock markets. They want to control the sector. So they make their rules to benefit themselves. So you still have opportunities to get into utility projects that will hold value due to the need for it and the use case for that individual asset with utilities. So, I mean, it's not too late, but I think the times of meme coins and all that for retailers, we were front running the institutions, but now the institutions are going to be front running us.
Absolutely agree on that. But have you recently heard, DigitalX, about gold is being revalued again? Gold is going back. I mean, I think the number was somewhere around $73,500. Did you hear that?
Yeah, it has to, because there's so much money printed. It doesn't it doesn't give gold the value that it needs to be at because of the amount of,
Well, they kind of deviated it and put it onto the store of value or the digital gold narrative, right? And that was what BTC is. And guess what BTC is? BTC is today. It's somewhere around 80,000, 85,000, 100,000. It went up to 125,000 or something. Think about it. Gold is gold. It's physical and it's real, right? Like it's physical assets, and it's been a form of currency or money for 2000. Or what is it? Since mankind, since they've discovered, since time, right?
Since Adam and Eve.
Yeah, since Adam and Eve. Yeah, let's say. But 73,500 is what gold is revalued at. Now, take the gold to silver ratio. How many ounces of silver equals 1 ounce of gold? Well, today it's about 40 to 50 to 1, 45 to 50 to 1, somewhere in between 45 and 50 to 1. But the historical norm should be about 8 to 1. Right?
I think it was 55 to 1, ain't it?
It's, somewhere around that. Well, give or take. I mean, from what I've gathered as far as research goes, 5 to 50, between 45 and 50 to 1.
Gold is 5,500. Silver is 100, and let's say 10. It's about 55 to 1.
55 to 1. Okay, let's just do it, what's in front of us. But the historical norm
54 to 1 or whatever. Yeah.
Yeah. So back in the days, it used to be 8 to 1. So for, when gold was $8, it would have been $1 for silver, right? So if you do the math, where do you think silver's going to go?
Well, there's another play behind this, right? The old system is no longer going to be here. So with the new system, each country's currency is going to be backed by commodities like gold, silver, platinum, things of that nature. Whatever their country holds in substantial amounts in order to do trades with other countries, their currency have to hold some sort of backing. So for that reason, I believe gold and silver will get revalued at a higher price.
Yeah, but here's the other thing, DigitalX. I mean, we're talking about, wealth managers or, private equity guys. I mean, wealth, financial guys, the people that provide, family offices, financial advisors, wealth managers. They're all their exposure to silver is much less than gold. They're all in on the gold side, right? But because they think that historically silver's been so volatile and it's been kept so low. I mean, this is the first time it's historic. It's that it crossed 3 digits, right? Into the hundreds now. For so long, it's been kept so low, right? Now they're saying that most of these financial pundits or wealth managers, they don't believe that that's going to continue. They think that it's going to continue. So they're not fully on board with the silver prices skyrocketing to 9,000 something, and according to 8 to 1 ratio, right? So their exposure to silver is less than that of gold. Is kind of what I'm trying to get at.
Yes. Silver has been heavily manipulated over the years through the banking system. So
Yeah, go
So
ahead.
you had mentioned something about the price of XRP that you wanted to talk about.
So yes, I did. I did see a on the social media airwaves that XRP had a quote unquote glitch on CNBC's Crypto World. So CNBC Crypto World did a piece on BTC and Ethereum and the top cryptos that are, and then XRP, and all those top three cryptos were put down and how they're completely been down, right? And they had BTC at somewhere around 89,000, and Ethereum was at like 2,900, and XRP was on the board with $126.10, I believe it was, or $126.90 or something like that. So that was apparently they said that was a glitch. Now, when somebody does a broadcast, right, you think that they would have people quality checking the material before they launch it or publish it, right? So why do you think that happened? Digitalized.
Maybe to tease us, or what do you think?
I'm thinking and this is not financial advice. I'm thinking that XRP is severely undervalued right now, today, as we speak. It's fallen below $1.90, I believe, right? Are you kidding me? That is insane. It should be somewhere around, I want to say, I think it should be right now, it should be around 275 per XRP. And they've, just like silver, they for thousands of years have kept the value of silver well below gold. You know, the ratio was, what do you say, 55-1, as you said, right? Similarly, look at XRP and look at Bitcoin. Bitcoin is at 89,000, XRP's at $1.90. That is effectively the comparison I want to draw here, because XRP is providing a solution for problems from legacy systems in the finance space. Bitcoin is not. It's just a hyper marketed coin. That's all it is. It was initially intended to be a digital payment, digital cash, but then they forked it in 2017. So now XRP coming in. Remember yesterday's episode, I told you Brad Garlinghouse understood what they needed to do in the financial space. They needed to be completely compliant with and transparent in regulations, making sure that they follow all of what SEC may go after them for. So he knew to establish that right off the bat. So guess what? That's the silver in the story here. So XRP is definitely going to be, I think, the actual Bitcoin value, right? So that's a bold statement, right?
There is one common denominator that's keeping the price of silver, or that has kept the price of silver down, as well as XRP, and that's JP Morgan Chase.
Oh, yeah. The custodian.
No, JP Morgan, the banking institution, they are
the silver custodians, right?
They short the silver markets, right? So they have a heavy short position that they were suppressing the silver price. So just like that, they suppressed XRP price as well with the marketing campaign they've done, because they were pro Ethereum. Because you got to remember, when William Hinman and Jay Clayton brought out the lawsuit against Ripple, that suppressed the price of XRP. So they put them in legal capture, right?
Right.
So that's one of the main reasons why the price of XRP is where it is right now. So
well, yeah, that's effectively, they did the same thing. I mean, you're talking about JP Morgan Chase. They did the same thing with silver, and they're still doing it. They front run on everything. They know the number. They know what's in the vaults. You know, the United States Treasury gave them for many, many years, they've been the custodians of the silver vaults, right? So they know anything that happens. That now all the short squeeze silver squeeze that just happened, you know, they front run. They're the only ones that have least exposure of all the banks right now. Why? Because they knew that they were short. They didn't have the gold, the silver in the vaults, right? So they knew to make sure that they need to drop their short positions and go long, because now, guess what? They were right. And that's why they're only 4% exposure, because of all the ounces of silver that were standing for delivery, right? So anyway, so that is what I'm saying. So these institutions, once they're on board, now you hear the BlackRocks, the JP Morgan Chases, all the banks, all the institutions, they're all going head first, all in on these assets. Now you're hearing about XRP more so on the mainstream. That just brings me back to the point, Digital X, of what you made on QNT. QNT, once everybody understands the supply is less than that of Bitcoin, right? They're 14.6 million. That 14.6 million represents a supply shock that's coming once everybody comprehends what it actually does in terms of the grand scheme of things in this infrastructure and the new digital finance system. So great point there, Digital X.
Yep. On the topic of XRP, XRP ETFs, I think they broke their regular record of, I think it was like 74 million XRP volume came in today.
But Digital X, I want to stress to our listeners, based off of what you just said on the ETFs for XRP, why is everybody giving the banks or these institutions that are rolling out these ETFs the upper hand? They're giving you 40%, 20%, whatever they're going to give you in the ETFs that you're holding, that you're buying into. Why not go straight and buy the asset itself and hold it on a cold storage wallet? Why go through an ETF? What security are you getting? You know that FDIC is a scam. So why are you going through another third party to get all of the benefits that you can get by just holding the asset directly?
Well, sometimes a lot of people have issues managing their own wallets, right? So, and then again, they're not too knowledgeable about things, so they would rather have an institution provide that service for them. I mean, that's the only reason why I could see why someone would do it, other than if they have capital that's in their trading account, which they don't want to pull out, or for tax purposes, or if it's a IRA or if it's 401s, you never know, right?
Yeah, so, but if you have that kind of money, right? If you're rich and you're going in and buying all of this $40 or whatever they're going to offer. I don't even know what it's going on. These ETFs are going on at, but per share. Why are you spending that kind of money for somebody else to do that work for you? You can hire somebody who knows about crypto, right, or digital assets and how to transact, and pay them pennies on the dollar.
Too.
What's that?
They're going to take fees too. And then they steal your assets on top of it.
You know what? At the end of the day, let's put it out there. Hey, if anybody wants any help, just reach out to Digital X.
Why? I would prefer them to manage their own funds the safest way they believe they can do it.
Yeah. But they're leaving a ton of profitability on the table, just for that little bit of work that they can do on their own.
Everyone for themselves, right?
Yeah.
You don't want any responsibilities for so-and-so doing this because Professor X was telling me I should do it myself.
Yeah. Yeah. So liability is a big deal, right? So, I mean, that's why we don't offer financial advice. Rather, we just educate on what's trending and tie it back to the digital asset space and how our listeners can take advantage. So that's why I keep saying, if you have any comments or questions, to always give us those questions and comments in our comment section, and then we can talk about it. So we're not giving you financial advice. We're teaching you how to fish, essentially.
Yeah. You might catch a shark.
Yeah.
Or a mermaid.
Or a whale, as they say in the crypto world.
Would you rather have a mermaid or a whale?
Whale for sure. But I'd rather be a whale in the crypto space. In the world of digital assets, I would rather be a whale than a mermaid, for sure.
All right. Hey, Professor, you want to go ahead and flywheel out of here? You could have
Yes, sir. Yes, sir. We're touching close to a little over a half hour now. So okay. So with that, if you don't have anything further, Digital X, we can flywheel on out of here.
Yeah.
Yes, sir. Okay. With that, the crypto flywheel is signing off today. Thank you.
Thank you.